Good morning, everybody. This is Paul Cramey. Welcome to this first of two sessions today or this week on pricing strategies and different things, promotions, pricing levels, pricing plans, discounting. So we've got quite a variety of things we're going to be looking at. Today, we're going to focus almost exclusively on some looking at promotions, pricing levels, pricing plans, what they are and how they interact with each other. And then we'll look at how they can, all of those can enhance your business and help you with your business. And then we'll finish up today on actually setting up some promotions and pricing levels. Notice that I'm deferring the setup of pricing plans from today, because that will become the focus for Thursday's session. And on Thursday, we'll look at, just in a general sense, talk about discounting and how to set up some discount mechanisms in control. Then we'll follow that, actually setting up a pricing plan or two, and then how that pricing plans can be integrated with discounting. So with all of that said, I'm going to change my view as far as what I'm looking at. Hang on one second. I'm going to switch over to control. There we go. Okay, I've got several things open, and I'm going to ping pong back and forth between some of those as we begin our discussion today. So what I want us to talk about first are just exactly what are promotions and pricing levels and pricing plans. Well, very simply, promotions are what they are, and then how they're used. Promotions are generally associated with a company, but they can be also used on a as needed basis. So if we look at this company that I've got set up in my database, look up here in the top right hand area, and this is where if you want to associate a promotion or a pricing plan or a pricing level with a company, this is where you do it, in the company record itself. And standard really means that it's going to use standard pricing for a pricing level. And in the case of standard, under the context of promotion, there isn't going to be any. It's not going to do anything. And in the pricing plan, it says that it's using the default pricing mechanism that's already in control. So if you wanted to change a pricing level, these are some that I've already got set up. You could just choose one of those. I'll comment more on those in a bit. And the same thing's true with promotions. I've got some that are already set up. We'll talk about those a little bit later today. And then likewise, there should be 3 or 4 or 5 different pricing plans that I've got set up. So in the company record itself, that's where you can choose and set up a pricing plan or pricing level. I'm going to leave this. Now I'm going to switch over to an estimate that I've got. And here, if you are using, for example, this uses this test company. So the company, when we just looked at it, didn't have anything set up for it. So if you wanted, on a case-by-case basis, to use a pricing level or a promotion on just a one-time basis, for example, then you could open have the estimate or the order, either one, and then you can select one of the pricing levels, or you can select one of the pricing, one of the promotions. So the key is that you can use those either at the company level And anytime that company's used whatever the pricing level or promotion was that was pre-selected, that's what will be used. But you can always change that on a case-by-case basis as you're going through. Now, what are the differences between promotions and pricing levels and pricing plans? Promotions and pricing levels are very similar in some sense because they will adjust the calculated price that internally in control, it's called the pre-discount price. And if we look at an estimate here, this one is not using any kind of a pricing mechanism, okay? But if I wanted to change that on this particular case, I'm going to edit the order or the estimate. This one's got a lot in it, so it takes a couple seconds to get it open. Now I can come up and observe. I'm going to go to the promotion first, okay? And pay attention to the discount column right over here. So if I choose a discount of 10%, now it's going to recalculate it recalculated all of these, all of the line items. So a pricing level and a promotion, when those have been chosen, they apply with one tiny exception. They apply to every line item in the estimate or in the order, okay? So the exception to that is in the promotion area, because you have a choice of a fixed dollar value that simply is $25, in this case, off of the calculated price. And that's going to appear as a line item in the estimate itself. So the pricing level and the promotion all apply across the board to every line item with that one exception for the promotion. Now, if I come up to the pricing level, and here you kind of notice that I cheat a little bit, because here I've got some that are going to actually increase the price. So the ones that you see that are above, it's going to increase at 5% or 10%, and then others that are going to reduce the price, okay, by 5 or 10 or 15 or 20%. And I'll comment on the use of those in just a second. So let's just take a simple one of a 10% increase. Now, this one is not going to influence the discount column, but instead it adjusted the total. So in this case, it increased what the original calculated price was by that 10%. Okay. Now I'm going to cancel this. And then we're going to go to another estimate that I've got open. This one is a slightly different one. And notice here, I have both of them are selected, okay? Because you can use the pricing levels and the price, or in the promotions, and even the pricing plan. They can be used in combination with each other. Oftentimes when you do that, they're going to produce some results maybe that aren't quite what you might expect, but there are some very legitimate situations where it makes sense to to use those in combination with each other. Now I've got there's a handout you'll notice that's posted on the GoToWebinar website. One of those for today, I will show you on the screen here in just a bit. but you might want to download both of those handouts. One is just for the today's session, and the other one will be one that we will use when we get into the discussion on Thursday. So I'm going to edit this one. And okay, so now it's got a pricing level that boosted it up 10%. And then here I have a fixed $25 discount. So you see that line item right here, okay? So it appears, the fixed dollar off appears as an actual line item with a subtotal of a negative $25, okay? And the pricing level is going to push these values up by that 10%. So if we take the 25 off, now that line item 3 should disappear. I'm going to edit that again. Yeah, there it disappeared, okay? So now if I came back and edited that again with a discount value, it's going to show the discount in the discount column, and the pricing or the promotion is going to be there's the discount, and then the pricing level is simply going to boost the value. Okay. Now I'm going to switch over to that other document because what the significance of those is the purpose of this is to illustrate the interaction and how these work with each other. So this first one is where I had the 2 line items, you know, that's over here on in control. First line item was 350. Second line item had a calculated price of 820. There was no pricing plan, there was no pricing level, and there was no promotion. So the results, okay? The second example, there was the pricing level adjustment of 10%. So it actually boosted the price by 10%, $35 and $82. Then the third one didn't have a pricing level, but it had a 10% discount, and that shows those. Now the fourth one is the interesting one, because there's both a level pricing increase of 10% followed by a 10% decrease for the promotion. So the 350 went up 35. So now the total of those two is 385, and that's then the 10% promotion comes after the fact. Okay, so the ordering of these is where the somewhat interesting results might come about. Now, this one I'm going to defer and really not talk about it until Thursday, because now we're injecting into it a pricing plan that's based on quantity, and we're showing the effect of that. But you got the same exact scenario, the discounting because of quantity by itself, the same discounting with also a pricing level adjustment, the same one with a promotion adjustment, and then the last one is where all of them exist, okay? Now I'm going to go back to control. So how can promotions and pricing levels and pricing plans, how can they help you and impact your business? Well, using promotions can have a positive effect because it gives you a means of granting a discount off that are related to very specific marketing campaigns. Um, they give you the means of tracking the usage or the orders achieved from a particular campaign. There are reports that will help with that. And then there's also gives a mechanism for doing a deliberate or what I call a discretionary discount on a case-by-case basis. So promotions have value from a marketing perspective, as well as a means of handling either deliberate discounting on an ongoing basis for a customer, for example, that might be a wholesale-based customer, or it might be where you just simply want to track a particular campaign. Pricing levels are somewhat the same. Now, I alluded to deliberate discounting on, through a promotion and an ongoing basis that has nothing to do with the marketing campaign. That's true. That's true. That you can do that. Where I found was that was the case with a lot of people that I did wholesale work for that wanted to see the effect of the discount that they were getting. In other words, they wanted to see that they were getting their 10% or 15% off. Okay, and you can do that with a promotion. Normally, if you got the pricing level comes into play more in the context if you have a customer that you're giving, for lack of better terms, value-added services to them, and you want to increase the pricing to them because of that value-added service that they are receiving. Another one that may seem strange, if you have a salesperson that maybe they get a 10% commission on gross profit or something like that. Well, it's not unreasonable in my judgment to slightly increase the price to that customer as a means of partially or in whole offsetting that commission that the salesperson is going to get. So you might boost the price 5% of the retail price, and then the salesperson might get a 5% or a 10% commission off of that based on what the gross profit was. You have some customers that are just very demanding. There's no other way to say it. In those cases, we had a few from time to time where we simply adjusted the pricing upwards, to compensate for that extra demanding service that they were requesting. Now, pricing plans, those come into play when you have very unique pricing related needs that you need to address. Okay. And the concept is that you have a set of products that you're going to sell on an ongoing basis to a particular customer, and you want those products from a pricing strategy standpoint to work differently than they would for other customers. So the pricing plan gives the means of saying, this customer A, when he uses this product or that product or a third product, you want the pricing to work differently for the situations where that combination of a customer and one or more products are joined together, so to speak, in an order or in an estimate. Now, the most common mechanism, and we'll explore this in quite a bit of detail on Thursday, the most common way of implementing pricing plans, and from my experience, is to do that by means of automating a a discounting mechanism. Best example that I can give of a client that I worked with here a couple of years ago. They had a very unique scenario where they were effectively a subsidiary of their parent company, and they wanted to keep track of the sales to that parent company, but they wanted to price those at cost. Well, it would have been, they tried it without just the normal situation, and it was an utter nightmare for them because they were trying to estimate what the cost was. They didn't really have a solid way of determining that. So they were just doing it kind of by off the cuff. Well, we used a pricing plan mechanism so that they no longer needed to do that. It simply would restate the price for the internal customers, and there were about 35 or 40 internal customers that needed it. But the other segment of their business was pretty ordinary, and they chose to do those with a pricing plan, but they really wouldn't have needed to do that. So pricing plans are very powerful, and they have very specific applications on how and when they can be used, but it's basically for purposes of addressing very unique pricing needs with a particular customer. Okay, how you go about setting up a promotion is in the pricing level. You can do it from a couple of different ways, and we'll explore both of those ways. And I'm going to look at promotions first. So I'm going to close these both down. Leave that one open. Okay. Now, the most common way, excuse me, is to go up to setup and pricing setup and all pricing. Now, keep in mind, you may have to have administrative privileges in order to do it this way. Then you're going to come down on the left-hand side to promotions. And these are ones that I already have predefined. But if you were starting from scratch, then you would come over to the far right on the action toolbar and simply say new. And then you're going to bring the template up. So the first thing that you're going to do is give it a name. You can, if you want to, add a description and any other information in here. And now, in the context of promotions, these are your important criteria. The valid dates mean if a radio is on always, that simply says that this promotion can always be used. And that would be the case if you were granting a particular customer an ongoing discount that didn't have a starting point and that didn't have an ending point. But if you were doing a true marketing campaign, then you might want that campaign to begin March 1st and end on March 31st. What that means is that if you tried to use that promotion before March 1st, you wouldn't be able to do so. And if you tried to use that promotion after the 31st, likewise, you wouldn't be able to use it. So it gives you the mechanism of designating how this particular promotion is going to be used, always or on a limited time basis. Then you have three other basic types of promotions. One that says tracking is exactly what it is. There's no monetary adjustment to the price based on tracking only. But it says that you have this promotion and you want to track the frequency and who used that particular, participated in that particular campaign, marketing campaign. The next one is you want to grant a discount. in the context of a percentage. You can put in whatever percentage value you want. And if you want the fixed dollar, you simply put in the dollar amount, $25, $50, whatever the case, and then you'll probably want to select an expense account, to expense that to internally. Now I'm going to cancel this, and then we'll look at some of these that are already defined. So here's the $25 one. I did put a time limit on for the month of April, and it's $25, and I associated it with an income account called promotion, and that's going to enable it to flow into your external general ledger if you're using that, or it would flow into the appropriate account for anyone that would be using the internal accounting. Now, 25 off on an ongoing basis, $25 off ongoing, 10%. I put the 10% in, and again, it's on a time basis. 10% where there's no restriction on usage, and then the example of one that's a tracking only. Now, if we leave this open and go back to the estimate, I'm already in edit mode, so I can do this. If we come down in an order or in an estimate and choose the downward arrow and then say new, it's going to bring us back to the same entry screen that we just talked about. So I won't review those again. So promotions, you can do from within the company, or within setup, set those in the company, and you can also create new ones on the fly from within an order or an estimate. Pricing levels are very similar. You go to setup, pricing setup, all pricing, and then you're going to, over here on the left-hand side, you're going to choose pricing levels. So I've already got some predefined. We'll go through those in just a bit. You go over to the action toolbar and say new. And here's where you are put in the name, the description if you want to, and then the mechanism here, okay? And this is the level. So if it's going to be, it's going to start at 100%, that's what they define as standard. And you can make it above 100%, or it can be below 100%. So above 100%, you're charging a premium for the for this particular order. If it's under 100%, you're in essence granting a reduction in the price that's going to be reflected at the subtotal level, not in the context of an order. So the 5%, whoops, let me cancel this. 5% is 5% above, so it's 105%. 10% is 110% above. 10% below is 90. 15% above. 15% below. 20% below. So typically those that are below, I would perceive that they would be wholesale type customers, or just good customers that you do a lot of work with, that you want to give them a reduction in the price. I'm just looking at my notes here just a second. let's pause here, see if we've got some questions on anything that I've covered.
No, it doesn't look like we have any questions, Paul.
Okay. All right. So again, here we could have come into a pricing level and said new and repeated exactly the same steps that we just talked about for adding the new pricing level, through the setup mechanism. What I'm going to do is I've covered the material that I had for today. I'm going to leap ahead and start. I need to lean over and get my notes here and start the discussion on discounting that I had thought that we would do on Thursday, but I'm going to pick that up today to kind of set the stage. Discounting is not the default pricing. I'm trying to find a way to say this. The default pricing in control does not include a specific strategy of granting a discount in various ways. Now that may sound bad, but it's not. But it just, because there are so many different ways of discounting that Sirius simply elected to provide the mechanism to do a very effective discounting strategy without planting seeds, so to speak, with ones that may not be appropriate. So the default pricing doesn't include discounting strategy. Without a discounting mechanism, you may have already found that there are certain circumstances where the pricing that is produced for a product or in a certain combination of quantity or size or whatever is not competitive. And that, sometimes that can be frustrating. And what it often leads to is arbitrarily granting a discount or simply overriding the price. Overriding the price is one that's probably the least appropriate, in my opinion. Granting the discount is a better solution for pricing that's not competitive, because you always have to react on the fly, but it can become arbitrary and not consistent from time to time. So the standard or the default pricing doesn't produce pricing across all spectrums that will always be that would always be competitive. What you will see is that if you monitor the gross margin on a line item by line item basis, or on an order basis, your total basis, you're going to see that the gross margin, without a deliberate discounting mechanism, is going to remain essentially flat. It may decrease very slightly, but after you get out to a certain point, it's going to remain basically constant. The little flutters that you're going to see are going to be attributed to the efficiency and the utilization of material. But other than that, the gross margin will remain essentially the same. Now, as I said, control provides the means of incorporating a discounting mechanism as a part of both the default pricing, if you choose to do that way, or to implement a discounting strategy that is going to be associated with a particular pricing plan. And in those cases, now you with that deliberate strategy in place, you're going to see, based on whatever the criteria is, you're going to see as you go into different increments or levels, so to speak, that the gross margin will decrease. Now, control, as I said, supports many ways of doing that. In fact, they call it variable types, and there are actually 700 variable types that can be used to drive or to automate discounting. For purposes of discussion, and probably the most frequently used, our discussion on Thursday, it's going to narrow that down to 2. And the 2 that will be addressed will be based on quantity. So as the quantity increases, the discount will get larger, which means that the gross margin will start at maybe 65 or higher percent, and then will gradually decrease as the quantity increases. From my experience, the quantity mechanism is probably the most conducive if you do it with relatively small in the context of the size of the image. So quantity has a very deliberate place in a discounting strategy. The second type of is where you may not have a particularly large quantity of images, but they're quite large. So that type of discounting mechanism can be based on area, total area. So it'll look at a line item, and if that line item has an area that's above a certain size, then it'll use a different discount level. Even larger will be the larger discount. So they work essentially the same, but one will work off of quantity as the criteria, and the other common one will work off of the total area. There might be a third one that is also area driven that would be used almost exclusively if you did a lot of vehicle wraps. When you get in to put in a whole wrap on a 53-foot long semi, and particularly if you're doing more than one at a time, now you get into some really huge jobs as far as the image area is concerned, but you may only do 1 or 2 of those. So those are appropriate with same area based mechanism, but the table, so to speak, that drives that discount would look different than it would for just a graphic or banners or something like that you're printing. Now there are
a chance we do have a couple of questions.
Okay, let's stop right there. That'd be good to stop.
Okay, I'm going to unmute Barbara Walsh. She has 2 questions. The first question is, if an estimate or order is cloned with an applied promotion to be used for a different customer, does the promotion stay with the clone?
Read that. Say it again, Linda. Let me make sure that I heard it right.
If an estimate or order is cloned with an applied promotion to be used for a different customer, does the promotion stay with the clone? So if you're cloning an estimate or order for a different customer that has the promotion, when you clone it, does that promotion carry forward to another customer?
I don't think so, but let's just do a quick. Okay, so this one,
You want to add a promotion to it?
I'm going to add a promotion to this one. And let's do a 10%, okay? And I'm going to save that. Okay. So now we've got this promotion, estimate number 509 for this company. So if I understood the question, we're going to clone that. And here was the promotion was manually set, meaning that I set it at the within the estimate, and it's an ongoing one. Pricing it was manually set. Okay, so I'm going to say okay. Now I have to change the company, so it's still there. And if I change the company to one of these others, I'm just randomly picking one. New contact, sales versus sale. Use this one. And now it's prompting you about the promotions. And I answered yes. And the promotion held for the that was there as a part of a cloned estimate. So the answer is yes. Does that make sense, Barbara? Now there was a second question. Linda, are you there?
Yes, another question is, how does the pricing level appear in the parts tab?
In the parts tab?
Yes.
It doesn't. I'm going to go back to this one again. And this one had a 10% off, okay? So I'm going to go to the parts tab and look at this one. And this has a suggested price. Now it's going to, so if we edit this one now and take that discount off, all of the costs and consumption related stuff is going to remain the same. So let's edit that. And take the promotion off. It should have, I didn't look at them closely quick enough to see what they were before, but let's go back to the line item. The discounts are gone, so let's look at the parts again. The price over here is price is 21, and put the discount on again. It took it down, so it is, but it shows over here the 19, but the suggested price didn't change. Okay, let's look very closely at that again. Look at the subtotal price for this third line item over here on the left is 19.6. but these add up to more than 19.6. If I take the pricing off, the promotion off, now over here at the subtotal level, it went to 21.8, and these numbers remained unchanged. So
Paul, is there a column chooser that may reflect that discount by the parts?
holler at me if anybody sees for promotion. I don't see it.
No, I don't see it. So I guess the answer is it's not on the parts tab.
It's not on the grid. It doesn't show it in the grid, but the subtotal over here on the lower left quadrant will reflect the promotion. That's an interesting question. Sure would have been nice had the suggested price or a column chooser be in there so that you could see that impact over here.
We can put that suggestion into Dev. All right, we have one more question from Val.
Okay.
And the question is, one of the options in the setting up the pricing level was used by the following companies and specific employees. Can you explain those options? And is there a report that tracks those discounts either daily, weekly, or monthly?
Let's do the reporting separately up on the reports menu.
And Val, I've unmuted you if
and
you
if
need
I
to
come down to
clarify.
Customers and receivables and promotions, there's a promotion listing for orders placed, built, sale, or in closed status. So this is a listing based on the statuses. And if we look at, I don't know that I have any orders that I played with at the order level, but we'll see. Here you can look at a specific time frame, and it's going to pick up all of the companies, and it's going to pick up everything that's in a sale status. So I'm going to come up here to all just so that I have a better chance of seeing stuff. That's I don't have any data that shows it, but that's a report that's off of the reports menu. In the quick reports group, how yours is set up for quick reports, it might look different than what mine does. But down in the sales analysis, I'm going to look at two of these because there are some discounting. There's some reports in there that I think address the discounting. Here's discount analysis, promotions, placed, promotions by placed, by orders, by picked up. So there's two in here that are discount or promotion related. And then these are just analytical type reports that might be of interest. They're all in that analysis report group, but there are 3 in there. Now, I don't think that those are down to the second part of the question that was by salesperson. But let me look at that just to make sure. There's nothing in the options area that take it down to the salesperson. No, I don't have data, unfortunately. This one at the place, because there's a couple in WIP. So these show the type of promotion. Here's the $25 off to these 2. And the discount. This discount report, I've always been perplexed because it says that they're in they're in the report, but yet the discount shows is 0. These are different discount types. No, those are just different categories. I need to do some more research on exactly what the purpose of this report is. To me, when I see the word discount, I assume that it's tracking the usage of discount, but it doesn't seem that that's the objective of the report. So the promotion one is the best. Now let's go back up to reports again. And come into we've already looked at that. Let's look at sales. I don't see anything at the salesperson level that's promotion related, nor there. Sales order discounts. It's been a long time since I've looked at some of these, so I'm not sure. Okay, here we can pick a time range and first just look at the grouping. Coming down, make sure what's in there. Okay, here you're going to see a separation by salesperson. Okay. So I think this probably is the best report. It's the same one that we just looked at. Yeah, it's exactly the same report. This would be a good report if we knew why it's picking up as many orders as it is. Linda, is there anyone that can confirm why this report is generating the way it is?
I'd have to ask the consulting staff.
Yeah,
They
that
would be
might
the
be
best ones to.
an interesting one to look into. Now, the other part of that of the question that I can you repeat, Linda? Because there's another piece of it that I don't think I've commented on yet.
Let's see. And is there a report to track the discounts? And can you explain the options in the setup, which was specific companies and specific employees?
I think these are intended as I think these were intended as just for you to enter notes, description, and then record, because I don't think it would be nice if you chose this and it was and this one was in a particular company. Let's save that and come back and put in the company. Let's go up to this one. No, let's go into that one. And let's say that we want to add the promotion for 10% off and save it, okay? Now let's go back and look at that setup again. And promotions and 10%. Okay, yes, if you associate a campaign, a promotion campaign at the company level, then it will show it in the setup here. But if you use it, if you didn't have it set at the company level and you chose it at the estimate or order level, you're not going to see the company association. Does that make sense?
Yep, that does.
Other questions? We've got a couple more minutes.
I don't have any other questions here.
Okay. One last comment that I didn't make when we were talking about the discounting. And I'll cover this again on Thursday, just as a means of kind of getting ourselves started. But we talked about discounting based on large quantities, non-vehicle graphics, vehicle graphics. Those are actually going to use a table mechanism to implement that kind of a strategy. But there are two other concepts that I've seen used, but they're more far-fetched. One is that you simply want to grant a constant discount and have it calculated by without using a promotion or a pricing level, okay? Because it would apply to a specific product or products. So that one I'm referring to as a constant discount. That would be for a product, so that unlike a pricing level, it applies to every line item, regardless of the products. But you could grant a constant discount for a particular product that might still be affected by pricing level, but it would zero in specifically on a product where that was set up. And then the last one is where you simply say, I want a I want the price to be based on achieving a fixed and constant gross margin. Okay. You might say that I want the constant or the margin, gross margin, to always be 60%. And the discounting mechanism would take the normal calculated price and then adjust it so that it's based on a fixed gross margin. We'll cover those and actually show them on Thursday in quite a bit of detail. Hope today was helpful. We'll see you on Thursday. You might want to make sure that you download the handouts for today, just more as an FYI. But the discount, the second handout, is very specific for our discussion on Thursday, and it shows the various discount tables, that would be involved in some of the things that we're going to cover in detail. Take care, everybody. Have a great rest of the week. Yeah, bye-bye.